How central bank digital currencies, CBDCs, will transform finance. Central bank digital currencies, CBDCs, represent a groundbreaking evolution in the financial landscape, poised to transform how money is issued, managed, and transacted globally. As digital versions of a nation's fiat currency, CBDCs are issued and regulated by central banks, offering a secure, efficient, and innovative alternative to physical cash and traditional banking systems. The rise of CBDCs is driven by the rapid digitization of economies, the decline in cash usage, and the growing demand for faster, cheaper, and more inclusive financial services. By leveraging blockchain or other distributed ledger technologies, DLTs, CBDCs aim to enhance payment systems, improve monetary policy effectiveness, and address challenges posed by cryptocurrencies and private digital payment platforms. This transformative shift has the potential to redefine the financial ecosystem, impacting governments, financial institutions, businesses, and individuals alike. One of the most significant ways CBDCs will transform finance is by modernizing payment systems. Traditional payment infrastructures, particularly cross-border transactions, are often slow, costly, and inefficient due to intermediaries, legacy systems, and regulatory complexities. CBDCs can streamline these processes by enabling real-time, peer-to-peer transactions that bypass intermediaries, reducing transaction costs and settlement times. For instance, cross-border payments, which currently take days to settle, could be completed in seconds using CBDCs. This efficiency could boost international trade, remittances, and global economic integration. Moreover, CBDCs can enhance domestic payment systems by providing a secure and accessible digital alternative to cash, particularly in regions where banking infrastructure is underdeveloped. This could foster financial inclusion, enabling unbanked and underbanked populations to participate in the formal economy. Financial inclusion is another critical area where CBDCs can make a profound impact. According to the World Bank, approximately 1.4 billion adults worldwide remain unbanked, lacking access to basic financial services. CBDCs can bridge this gap by providing a digital currency that is accessible to anyone with a mobile phone or internet connection, even without a traditional bank account. Unlike private digital payment platforms, which may exclude certain populations due to fees, credit requirements, or technological barriers, CBDCs can be designed to be universally accessible and affordable. For example, central banks could issue CBDCs through digital wallets that do not require a bank account, allowing individuals to store, send, and receive money securely. This could empower marginalized communities, such as rural populations, women, and low-income households, to access financial services, build credit, and improve their economic prospects. CBDCs also have the potential to enhance the effectiveness of monetary policy. Central banks typically influence economic activity by adjusting interest rates and controlling the money supply. However, the transmission of monetary policy can be slow and uneven, particularly in economies with underdeveloped financial systems or high levels of informality. CBDCs can provide central banks with greater visibility into economic transactions, enabling more accurate and timely data collection. This could improve the precision of monetary policy decisions, allowing central banks to respond more effectively to economic shocks and inflationary pressures. Additionally, CBDCs could enable central banks to implement innovative policy tools, such as programmable money or targeted stimulus payments. For example, during a recession, a central bank could distribute CBDCs directly to households with expiration dates, encouraging immediate spending and stimulating economic activity. The introduction of CBDCs could also address the challenges posed by the rise of cryptocurrencies and private digital payment platforms. Cryptocurrencies like Bitcoin and Ethereum have gained popularity as decentralized alternatives to traditional currencies, offering benefits such as transparency, security, and borderless transactions. However, their volatility, lack of regulation, and potential for illicit use have raised concerns among governments and central banks. Similarly, private digital payment platforms, such as PayPal, Venmo, and Alipay, have revolutionized how people transact, but operate outside the purview of central banks, raising issues related to data privacy, financial stability, and monetary sovereignty. CBDCs can provide a regulated, stable, and sovereign digital currency that combines the benefits of cryptocurrencies and private platforms while mitigating their risks. By offering a trusted digital alternative, CBDCs can help central banks maintain control over monetary systems and ensure financial stability in an increasingly digital economy. Another transformative aspect of CBDCs is their potential to enhance transparency and reduce financial crime. Traditional cash transactions are anonymous, making them susceptible to illicit activities such as money laundering, tax evasion, and terrorist financing. CBDCs, on the other hand, can be designed with varying degrees of anonymity, balancing privacy with the need for transparency. For example, a CBDC could allow small transactions to remain private while requiring larger transactions to be traceable and subject to anti-money laundering (AML) and Know Your Customer (KYC) regulations. This could significantly reduce financial crime by making it easier for authorities to track and investigate suspicious activities. Additionally, the use of blockchain or DLT in CBDCs can provide an immutable record of transactions, further enhancing transparency and accountability. The adoption of CBDCs could also reshape the banking sector and its role in the financial system. Traditional banks act as intermediaries between central banks and the public, facilitating the distribution of money and providing financial services. However, the introduction of CBDCs could disrupt this model by enabling individuals and businesses to hold accounts directly with the central bank. This could reduce the reliance on commercial banks for basic financial services, potentially leading to disintermediation. To remain competitive, banks may need to innovate and offer value-added services, such as wealth management, investment advisory, and customized financial products. Alternatively, central banks could adopt a hybrid model, where CBDCs are distributed through commercial banks, preserving their role as intermediaries while leveraging the benefits of digital currency. Despite their potential, the implementation of CBDCs is not without challenges. One major concern is the impact on financial stability. If individuals and businesses shift their deposits from commercial banks to CBDCs, banks could face liquidity shortages, reducing their ability to lend and support economic growth. To mitigate this risk, central banks may need to impose limits on CBDC holdings or offer interest-bearing CBDCs to balance demand. Another challenge is ensuring cybersecurity and protecting against fraud, hacking, and other digital threats. CBDCs will require robust technological infrastructure and stringent security measures to safeguard user data and maintain public trust. Additionally, the design of CBDCs must address privacy concerns, ensuring that individuals' financial information is protected while complying with regulatory requirements. The global adoption of CBDCs also raises questions about interoperability and international cooperation. As more countries develop their own CBDCs, ensuring compatibility between different systems will be crucial for facilitating cross-border transactions and maintaining global financial stability. International organizations, such as the International Monetary Fund (IMF) and the Bank for International Settlements (BIS), are already working on frameworks and standards to promote interoperability and collaboration. For example, the BIS Innovation Hub has launched projects to explore multi-CBDC platforms that enable seamless cross-border payments. Such initiatives will be essential for realizing the full potential of CBDCs in a globalized economy. What do you think about CBDCs? Will they be a game changer or a financial risk? Drop your thoughts in the comments. Don't forget to like, subscribe, and hit the notification bell to stay updated on the latest trends in digital finance, blockchain, and the future of money.